Well, dividends, first of all, are a good sign. As an investor, you're getting paid money from the company's profits each year, usually from the company's profits. So a company earns $100 million. It decides we're going to take $10 million of that $100 million we just earned this year in profit. We're going to pay it back directly to our shareholders in the form of a dividend. Now, companies that can pay dividends are usually stronger than companies that can't. They usually have more of an operating history, a longer record of profitability than companies that can't. So many investors favor companies that pay dividends, and certainly here at the Motley Fool, our income investor service and lots of other of our analysts favor companies that pay dividends. And they'll show you some studies that show you should only own companies that pay dividends, etc. With that said, if you did earn $100 million last year as a company, you didn't have to pay out anything. Maybe you want to spend all of that money reinvesting in this exciting, high-growth, dynamic industry that you happen to be operating in. So it's not always smart to pay out your money in the form of a dividend. In fact, usually the companies that do it can't find enough good uses for that cash. Maybe they're a little bit more mature. Maybe they're growing a little bit more slowly now, so they start kicking money back to shareholders as a little bit of baksheesh. There are many high-growth, dynamic companies that never pay a dividend. And in fact, Berkshire Hathaway, Warren Buffett's company, has never paid a dividend. And so let's remember the purpose of a dividend. It is to reward shareholders for owning the stock, but it doesn't always mean that those are the best companies or the best investments. Overall, though, I like dividends.